The yield curve is uninverting. Markets are in the process of making a massive double top formation, and all the broad market indices are firmly in negative gamma exposure territory. Even on the 0 DTE GEX flow chart, everything today is just heading lower. All the strikes that we track, you can see the 540 strike has really been standing out all morning, and that's exactly where we've just tagged a few minutes ago. We're actually recording this just after noon on Friday, September 6th. We'll take a look at all the reasons for the sell-off, but first let's just do a quick analysis of market action over the last few weeks. You can see we've been in this consolidation zone between the 555 and 564 level for a couple of weeks and just broke down from this level this week. The first support zone that we were watching for was the 550 level, which we broke through yesterday. And today we're hitting the massive 540 strike. This is an important level that we've been watching for quite a while. If this breaks, the next immediate target is going to be this 535 level. But look down here, below 535, there's a high probability that the 500 strike could get hit. So we've already got our short positions on, and we'll be looking to close those out on another leg lower. This is a large dealer cluster zone between the 535 and 540 strikes. And so this is an area where we're going to be looking to add a couple of more positions on the long side. We've already got our short hedges working for us. And so we'll go through a few of those positions later in the video. Here's our calendar of important events that we're watching here in the coming weeks. The jobs data came out this morning, a bit of a mixed picture, less jobs, but also a lower unemployment rate. Next week is a huge week. We've got the presidential debate. Usually I wouldn't consider this to be a market moving event, but I'll go through here in a second why this is such an important debate. This actually may be the only debate, and so this is going to be a key event in the week that could affect markets. We've also got inflation data coming out on Wednesday and consumer sentiment data on Friday. And of course, Wednesday the 18th is the big FOMC announcement. Is it going to be 25 basis point or 50 basis point in rate cuts? So in terms of the presidential debate, we've got two very different candidates with two completely different policy platforms. When we look at these election polls, from a competitiveness standpoint, we can see that the most competitive states are actually swing states: Georgia, North Carolina, Pennsylvania, Nevada, Michigan. These are huge states that could really swing the ultimate outcome of the election. And so because so many of these states are so close, we're talking less than a 1% margin of error in most of those states. And so this debate could really tip the needle if one candidate or another outshines the other. Again, normally I wouldn't care about the political debate, but in this case, I think it could really impact markets. Trump is more focused on tariffs. Harris is more focused on raising taxes. So these are vastly different problems that could affect the market depending on which candidate steps ahead. And as I mentioned at the beginning of the video, we also have the un-inversion of the yield curve just happening yesterday. And I think this is the longest period in history, I believe, where the market has been inverted. And if we look back at previous inversions, each time led to a recession either immediately following or during the inversion. And so this is a crucial point in time. I think the market recognizes this point, and the question is really just going to be how long is it going to take? Like if you look back in the late 70s, by the time it uninverted, which was here, it was already in the middle of a recession. Same thing in the early 80s, already in a recession. Other scenarios like in 2007, you actually had quite a bit of lead time. This uninverted in 2007 really didn't hit recession, or at least wasn't recognized until 2008. So if history is any guide, we could be anywhere from 1 month to 6 months into a recession. And this is what's a little scary for the markets. I mean, being at all-time highs, which is, right at this level right here, we've only just started selling off. If that's going to continue, there could be a long ways to go. We're seeing, the 500 level being a large concentration of open interest in the options market, both on the SPY and on the S&P 500 at the 5,000 level. And so this is a long ways to go. I mean, we're talking another 8% potentially to the downside. Now, I don't want to paint, a doom and gloom scenario. There is still a possibility of a soft landing, even though a lot of people are throwing that out the window. There's still that possibility that the recession could be muted. There's also the possibility that the market could continue to new all-time highs in the coming months. And these are scenarios that we want to play for. I mean, the VIX is spiking here at 23 today. We've seen a couple of VIX spikes here in the last month or so. And it's important to note that with this increased volatility comes increased opportunities, especially when you're playing in the options market. You can put on an asymmetric strategy, which will allow you the potential to profit in various outcomes. That's what we try to do. Check out our Discord if you guys are interested. We talk a lot about our strategies there, especially in the options market. I'll put a link in the description below. So now let's talk about what's working in the market. First of all, United Healthcare. This is going to be one of the go-to plays for a lot of investors. It's kind of a safety net, a very large considered sort of a flight to safety kind of stock. You can see it's basically been just trending higher slowly despite the market turbulence. We like the 600 strike with the big gamma exposure concentration. We're actually going to be looking at a double calendar spread on this name, targeting the September 20th expiration. So we'd be selling the September 20th 600 strike, buying the September 27th 600 strike. And this is puts and calls on both sides. This is something we'll be discussing the ins and outs of in our Discord. And I think this type of strategy is actually a really great play for a United Healthcare type name. This is one of those stocks that's just slowly grinding higher in this type of market environment. So this is one of these names that we like to add, try to collect premium over time as the stock oscillates around this major gamma exposure level. Nvidia, also another name we've been watching for a while, was tagging this 130 strike, which we've been talking about for about a month and a half now, as Nvidia shot back up during the rally earlier in August, consolidated at this 130 strike, which was a very large gamma exposure leading all the way up here. Tagged that dealer cluster level here. Selling pressure came in. It just has not been able to recover. Obviously, the 100 strike is going to be a key level here as it's coming into today. This could be an interesting area to take a long play in, potentially for a move back up into the 0 gamma level at the 110 strike. That would be a short-term move for a possible sort of dead cat bounce. This could be a nice little contrarian play in the short term. That's something we're going to be looking at next week as well. Another name I'm watching is Walmart. Walmart is one of those flight to safety type of stocks that investors really like to flock to during times of market turbulence. You can see it's down today, but nowhere near the 4 or 5% type of moves you see across, most of the mega cap names. Walmart, also similar to United Healthcare, has really just been grinding higher. We can see there's a large gamma exposure concentration at the 80 strike. That's primarily in the September 20th and the October monthly expirations. And so our view on Walmart is there could be a further period of consolidation here between 75 and 78. But ultimately, if volatility remains in the market, more investors are going to seek that flight to safety in these large Dow component type names. So as you can tell, we try to mix it up between, mega cap names like Nvidia, which we're looking to potentially capture any kind of bounce that comes in here, down here at the 100 strike. You can see even just from the chart, this looks like a great potential support zone, at least temporarily, for a bounce. But we also like to look at what's going to work if the market environment continues. Names like United Healthcare, Walmart. We also have some hedges in place. We put hedges on the Qs yesterday and as well as several weeks ago. Those, of course, are paying out for us really nicely today. So overall, this is part of our asymmetric risk-reward approach. If you guys are interested in learning more about our strategy and approach, head over to geeksoffinance.com to get access to our analytics and data through our dashboard, as well as our Geek University course, which is a 5-hour option strategy, gamma exposure, and our overall trading approach. That's free for all members. It's included in your membership. Also, be sure to check out our community Discord. Come on in and say hi. Links in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.